Hey, welcome to our explainer. Today, we're diving into a really interesting financial tool, one that kind of lives in two worlds at once. Indexed Universal Life Insurance, or IUL for short. It's got this promise of keeping your money safe, like insurance, but with the growth potential you'd expect from the stock market. So, how does that even work? Let's get into it. So, let's just start with this big idea. What if your life insurance wasn't just a safety net for your family? What if it could also be a way for you to build your own wealth while you're still around? That's really the core promise, the big idea behind IUL. So what is this thing really? You hear IUL and it sounds complicated, but at its heart, it's basically a financial hybrid. Let's break down exactly what that means. Okay, so here's the official definition. An IUL is a type of permanent life insurance. That just means it's designed to cover you for your whole life, not just as that term. But the really unique part is that it's two things packed into one policy. You've got the death benefit, for your family down the road, and then you have this cash value component that's kind of like a built-in savings or investment account. And because it has these two sides, you often hear it described as the best of both worlds. The goal is to give you that peace of mind, that security you get from life insurance, but also mix in the growth potential you'd want from, say, a savings account that's actually working for you. All right, so let's zoom in on those two pieces, the insurance part and let's call it the investment style part, and see how they actually fit together. It's a pretty straightforward split when you look at it this way. On one side, you have the death benefit. That's for your family's future. It's permanent, it's guaranteed, and a huge plus, it's usually paid out tax-free. Then on the other side, you've got the cash value. Now that's for your financial future. It's an account built for growth, and that growth is tax-deferred. Okay, so we keep talking about this cash value account that's supposed to grow. But how does it grow? This is where we get to the real magic of an IUL, the part that makes it so different. Let's call it the indexing engine. Right, the indexed part of IUL, that's the secret sauce. The interest your cash value earns isn't some boring fixed rate. Instead, its performance is tied to a stock market index, something like the S&P 500. Now, here's the key thing to understand. You don't actually own any stocks. It's more like your account gets to piggyback on the market's performance. Your money grows as if it were in the market without actually being in it. Now, this is where it gets really, really smart. Tying your money to the market sounds risky, right? Well, an IUL comes with these two amazing guardrails, a floor and a cap. Think of the floor as your ultimate safety net. It's often set at 0%. What does that mean? It means if the market has a terrible year and goes down, your cash value doesn't lose a single penny. The trade-off for that protection? That's the cap. It puts a ceiling on how much you can earn in a really great year. So you're basically trading some of that explosive, unlimited upside for the peace of mind of having zero downside. Not a bad deal for many people. So when you put all that together, you can start to see where IUL fits into the bigger world of life insurance. It's really designed to be this perfect middle ground. You get more growth potential than you would with a typical whole life policy, but you're taking on way less risk than you would with something like a variable life policy, where your money is directly in the market. Okay, so we've got the mechanics down, we know how it works. Now let's talk about the benefits. What's in this toolkit that makes IUL such a compelling option for a lot of people's financial plans? Let's be honest, the tax advantages are a huge reason people look into IULs. First, that cash value we talked about, it grows tax deferred. Then, when you want to access that money, you can often do it through policy loans that are, get this, tax-free. And of course, the death benefit itself passes on to your beneficiaries without them having to pay income tax on it. I mean, that's a really powerful trifecta of tax benefits. And it's not just about taxes. There's also this amazing amount of flexibility built in. That universal part of the name is key. It means as your life changes, you can often adjust your premium payments. If you build up enough cash value, you might even be able to skip payments for a while. And you can tap into that cash when you need it for, life stuff. On the top of all that, in many states, the money inside the policy is protected from creditors, which is another layer of security. So when you take this whole toolkit, you've got the tax breaks, the flexibility, the protected growth. How do people actually use these policies as a real strategy for building wealth over the long haul? Well, here are some of the most common ways people put an IUL to work for them. A big one is supplementing retirement income, creating another stream of cash flow down the road. It's also used for just general long-term financial security. It's a cornerstone of a lot of estate planning and wealth transfer strategies. And you even see people using it as a tool for multi-generational wealth, setting it up to help pay for college or a down payment on a house for their kids or grandkids. And that really brings us to a final, bigger question to think about. At what point does a financial product stop being just a product and start becoming a legacy tool? The answer, it seems, is when it manages to combine protection for right now with a really strategic plan for the future. It's about more than just money. It's about creating a sense of financial security that can actually outlast you. And that, well, that's definitely something to think about.